The hottest sector this year has been consumer discretionary stocks, made up of companies that sell non-essential goods and services. But will this group continue to do well with an interest rate hike looming? Morgan Brennan takes a look.
In a rocky year for the market, consumer discretionary has been the top performing sector, up 12% versus the broader S&P 500's 1.5% gain. Gasoline savings at the pump have translated into more spending on certain services and goods, propelling a number of these stocks to all-time highs. Analysts say consumers are in recovery mode, albeit a gradual recovery, and they're being very selective about what they buy.
There aren't a lot of trends that carry over from year to year, but we do see, interestingly, diversified consumer services has done well. It's performed well. Now, that's an odd catch-all. It includes in there durables, some education stocks, some apparel stocks, but that typically has done well.
According to market data firm Kensho, over the past decade, there are some stocks that tend to outperform during the holidays, from Black Friday through year's end. Walt Disney Company is one of them, averaging a 4.5% gain over the last 10 holiday seasons. And with the new Star Wars coming out in just a few weeks, a name to consider again. Goodyear Tire and Rubber has also been a strong performer, gaining an average of 8%, as people need new tires thanks to all that holiday travel and winter weather. But this December may also be different. There are increasingly more signals that the Federal Reserve could raise rates next month. If history is any indicator, consumer stocks could sell off.
The consumer discretionary sector as a whole has high valuations, so it's vulnerable to a re-rating, to a repricing when the Fed raises rates. Now, will it be dramatic? No, because again, we're coming off a very low base. But we do have to worry about vulnerability there. So really, any names within the consumer discretionary space, and there are many, most are highly valued, they are vulnerable to seeing some deterioration in stock price as a result.
According to Kensho, since 1990, there have been 3 rate hike cycles and a one-off increase. In the month following each of those liftoffs, consumer discretionary fell more than 2%, largely in line with the broader market. Among the worst performers, auto parts retailers like AutoNation and O'Reilly Automotive. Still, some names may provide relief. McDonald's tends to hold up in a few retailers, Best Buy and Kohl's. But as the year winds down, the 2 biggest winners have centered around the internet. Netflix and Amazon have both logged triple-digit percentage gains in 2015. And many on the street expect these names to keep benefiting from a recovering consumer next year. For Nightly Business Report, I'm Morgan Brennan.